Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the gold market. So we already have discussed the situation in euro currency, and we said that we have said and put the hope that maybe euro still has some power to complete at least minor ABCD retracement on the daily, slightly higher retracement before turning down again. But it seems bearish momentum steps in a bit earlier as negative news flying fast and furious. And you could ask why the gold has a bit different reaction on the same news. Because news mostly is European Union related, so it mostly hurts the rivals of the United States dollar. While in the United States, although we have some negative moments, but they are not so crucial as in the European Union. So major negative background right now is that global economy lose the harmony, lose the synchronization of the recovery, because we have more and more negative news in Europe, while in the United States situation more or less constant, and some positive statistics we've got. It is relatively gradual situation with vaccination. So here we do not see some really big negative impacts. The one thing that we could say on the United States is that Janet Yellen and Joe Biden previously already said about possible tax increasing. That makes some pressure. And Yellen yesterday said that it's necessary to finance government projects, and somehow should be some compensation of the big stimulus packs that were issued on the markets in the economy. It needs to be somehow getting back, and tax increasing is one of the tools that government could use. So this is first moment. Negative moment is mostly political. Is that situation between the United States and China again becomes tough, but this is mostly supportive factor for the gold. So, and as a result, as a major negative impact stands in relation to Europe, that's the reason why the gold doesn't show so significant downside action compared to the euro currency. Because this is problems in Europe. With the vaccination, and AstraZeneca vaccine shows some outdated information, so some problems exist with for the health of those who make the vaccine. So, second, the new lockdowns in the major countries in the European Union. So all the stuff put the shadow on the performance on the euro currency. And here the situation stands a bit tricky on the gold. So we have some negative factors, but gold keeps theoretical chances to show upward action and hit finally our predefined level that we have discussed around 1760. Another reason why this could happen, and take a look at on the interest rates, we have the pullback this week as expectations of the significant inflationary pressure decreased, since the overall global economy has risked to not recover the pace that you initially suggested. That makes the pressure on the interest rates in the United States, and that could be additional supportive factor for the gold as well. That's why here, although we do not call for taking the long position, as we said recently, we are mostly watching for a possible taking the short position on the gold, since major target stands untouched. Overall price action stands very gradual and slow. That definitely is not a reversal. It's not some new rally on the gold. This is just a pullback here. And we're still considering the same shape of the patterns. The first is the butterfly, although we have adjusted the right being bottom slightly lower today on this recent action. And we're still watching for this ABCD target. Both of them stand 1762, 1765, same area. Well, concerning the long position, that is not our primary idea. So, but we keep it on your decision. If you're trading intraday charts, this is the pattern that you theoretically could use and place very tight stop, so your risk will be minimal, because for using the butterfly you could place stop just below the wing, right here. It's a very small risk, but if you will be right, in this case market could reverse and hit the 1765, it will be significant, more than $30 per contract action, and that's a very good result for intraday session. But this is choice, is up to you. We're not calling to take the long position because mostly on the daily chart we're considering this level as a potential area where we could consider taking the short position. So that's our view on the gold as well.